Let's talk about payday loans, because they might seem like a quick fix, but they can trap you in a nasty cycle of debt.
Dude, it's a modern-day payday money center. What the heck? They do payday loans, auto title, notary service. Holy fuck. Dude, I thought these were done for.
Payday loan companies, who are controversial for the high rates they charge, governments have tried to rein in some of the fees, are suffering here.
Let's not waste time. It's Wednesday, rent's due Friday, your gas tank's on E, your fridge light turns on, but that's about all that works in there. Your debit card just got declined at 7-Eleven for a $4 coffee, and the guy behind the counter gave you that awkward look. You know the one. And just when it feels like the walls are closing in, you see it. Big, bold, red letters in the window of a dusty little shop between a vape store and a laundromat. Get $500 instantly. No credit check, no questions asked. Suddenly, your heart rate drops. Your shoulders relax. It feels like breathing again. Except it isn't. It's not a lifeline. It's financial quicksand. That glowing instant cash sign, that's the bait. And if you bite, you're walking into one of the most aggressively predatory traps in modern finance, the payday loan. Let's break it down. A payday loan is a short-term, high-interest loan, typically between $300 and $500, meant to hold you over until, you guessed it, your next payday. The term sounds simple enough. Borrow now, repay in 2 weeks. No credit checks, no long applications, just your ID, a recent pay stub, and a post-dated check or debit authorization. Boom, cash in hand. It's the financial version of fast food. Quick, greasy, and terrible for your long-term health. You'll find payday loan stores in the same places you'll find dollar stores, pawn shops, and check cashing outlets. Why? Because they target the financially desperate, people in underserved, low-income communities where access to traditional credit is scarce. Sometimes they don't even need the storefront anymore. With online payday lenders, it takes 60 seconds to apply and 24 hours to have cash in your account. Convenience meets catastrophe. These loans are always marketed as a solution. The tone is friendly, the messaging casual. It's just a little help till Friday. But make no mistake, this isn't charity, it's strategy. Let's be real. Most people don't wake up one morning and think, let's get a payday loan today. They do it because they're backed into a financial corner. Your kid has a fever and needs a prescription. Your car broke down and you can't get to work. Your electricity's about to be shut off. You're living paycheck to paycheck with no savings, no credit card, and no one to call. So when someone offers you $400 with zero paperwork, your brain doesn't calculate APR. It just thinks, I can breathe, I can fix this, I can survive. And payday lenders know this. They thrive on your stress. But let's talk numbers, because this is where things get ugly. Say you borrow $500. A typical payday lender will charge you around $75 for that privilege. Doesn't sound too bad, right? You get $500 today, and you agree to pay back $575 in 2 weeks. But here's the trick. That's not just a $75 fee. That's a 15% charge for 2 weeks. Multiply that out over a year, and the real APR is over 390%. In some states, it's over 600%. This is how they hide the real cost. They don't talk about interest. They call it a flat fee. Just a little thank you for the fast cash. But it's not little, and it's definitely not kind. And here's where it turns from expensive to dangerous. Because when 2 weeks roll around and you still don't have the full $575 to repay it, you do what most people do. You roll it over. You extend the loan, pay another $75, and buy yourself another 2 weeks. And then maybe you roll it again and again. This is the cycle of debt. It's not a bug in the system. It's the entire design. You weren't supposed to repay that $575. They're not hoping you do. They're hoping you don't, so they can keep charging you that $75 every 2 weeks until you've paid them back 3, 4, even 5 times what you borrowed. And you're still stuck. In fact, over 80% of payday loans are either renewed or immediately followed by another loan. Most borrowers take out an average of 8 to 10 loans a year. You're not borrowing $500 for an emergency anymore. You're renting $500 every 2 weeks just to stay afloat, and it's costing you hundreds, sometimes thousands of dollars. Payday lenders don't make money when you repay your loan on time. They make money when you struggle to. They don't want responsible customers. They want repeat customers. Desperate ones, vulnerable ones, people who can't afford to miss work, who can't afford overdraft fees, and who don't have access to regular credit. And it gets worse. Because while you're stuck churning your next paycheck to pay off the last loan, your actual financial health is deteriorating in the background. Some payday lenders don't report to credit bureaus, so even if you do pay on time, you get no credit score boost. But if you default, oh, they'll come after you. With collection agencies, with lawsuits, with aggressive overdraft attempts on your bank account that can trigger NSF fees, non-sufficient funds charges, stacking $35 fees on top of your original debt. Suddenly, you're not just broke, you're in negative territory and your bank account gets shut down. Now you're not just a customer in debt, you're unbanked. Payday lenders know all of this. This isn't some broken system they accidentally created. This is the business model. It's built on the backs of people who can't escape. There's a reason these shops sit on every other corner in low-income neighborhoods, but are nearly invisible in wealthier zip codes. It's not demand, it's design. Think about it. What other kind of business makes more money the more its customers fail? What kind of industry depends on human misery for profit? They are not meant to help you solve a crisis. They are engineered to become the crisis. And the more you dig, the more you realize how sophisticated and manipulative this whole system is. The marketing is slick. The storefronts look friendly. The websites are clean and easy to use. They've got smiling actors in their ads telling you it's okay to ask for help. But none of that help is free, and none of it is neutral. The fees are disguised, the risks are buried in fine print, and the stress, the late-night panic, that's your problem now. So how do they get away with it? Because payday lenders are protected by lobbying power, legal loopholes, and the fact that most people who get trapped in this system are too exhausted to fight back. They're not writing complaints to Congress, they're just trying to keep the lights on. In many states, payday lending is barely regulated. Some have tried to cap APRs at 36%, but in others, it's the Wild West. One study showed that in Texas, borrowers paid over $1.5 billion in fees in a single year, just in fees, not principal, not interest, just fees. And those billions, they don't stay in the neighborhood. They go to corporate headquarters, private equity firms, and financial backers who know exactly what kind of business they're in. They're not ashamed. They're invested. You're not just fighting against interest rates. You're fighting against a machine that was built to bleed you dry and smile while doing it. But here's the part they don't want you to know. You can escape. There are better options. And this trap? It only works if you don't see it. You're not supposed to succeed. Think about it. If everyone paid off their payday loans in 2 weeks like the pamphlets promise, these businesses wouldn't be profitable. But the average borrower doesn't take out just one loan. They take out 10 or more, each with its own set of fees, rollovers, and snowballing balances that don't go away. Just mutate into something harder to track and even harder to kill. There's no underwriting, no budgeting help, no financial counseling, just a signature and a due date. These lenders aren't interested in your income-to-debt ratio or your financial goals. They just want you in, hooked, desperate, and returning. See, most loans in traditional finance are based on risk management. Banks look at your credit score, your employment history, your income, your ability to pay. But payday lenders? They flip the equation. They realize they can actually make more by betting you'll fail. Because every time you fail, they collect more fees. You pay for your own suffering. It's like if a gym made more money when you skipped your workouts and never canceled the membership. Except here, instead of gaining weight, you lose your peace of mind, your paycheck, your future. And they know exactly how to keep you coming back. They don't just wait for you to be desperate. They engineer the desperation. That little blinking, apply now, instant approval button, it's not just a call to action, it's a psychological trigger. A promise that your pain ends with a click. Limited time offer. Cash in minutes. Bad credit? No problem. They frame it like a gift, as if they're doing you a favor by charging you 400% APR. It's built on urgency and mental shortcuts. When you're panicking about rent or food or your kids' school supplies, you don't sit down to calculate annual interest rates. You act, you click. You take the money and promise yourself, I'll figure it out later. But future you isn't a superhero. They're just another version of present you, now with more debt and fewer options. And the lenders? They're counting on it. This is mental accounting failure at its finest. That false belief that tomorrow, next paycheck, next month, everything will be different. But the math doesn't change. And when the $575 is due and your paycheck's already carved up by bills, it's back to the storefront, back to the app, back to the cycle. They're not just betting you'll come back broke. They're building the game so that you have to. And behind those dusty strip mall locations and flashy payday loan apps, there's an industry worth over $9 billion per year in the US alone. That's right, billion with a B. This isn't just a handful of sketchy stores with neon signs and faded blinds. This is a well-oiled, deeply entrenched, heavily lobbied system. Payday lending is still legal in over 30 states, though regulation varies widely, protected by loopholes and backdoor legislation, funded by big names you'd never expect. Some payday lenders are owned or backed by hedge funds and private equity firms. Suits in boardrooms profit from people being too broke to live. These aren't shady side hustles. They're polished operations with investors, stockholders, and quarterly earnings calls. And what's their product? Financial quicksand. They make a living off the working poor and the financially fragile, off the single mom trying to stretch her paycheck, the warehouse worker whose hours got cut, the college student buried under tuition and rent. That's their customer base. Not the rich, not the irresponsible, but the desperate. So what can you do? Because here's the truth. Sometimes the bills don't wait. Emergencies happen, and if you're backed into a corner, what choice do you have? Turns out, more than you think. Credit unions, often overlooked, offer something called payday alternative loans. These are small dollar loans designed for emergencies, usually with far lower fees and longer repayment windows. They don't advertise like payday lenders do, but they exist, and they're often much safer. Then there are employer-based solutions. Many companies now offer earned wage access, apps that let you access the wages you've already earned before payday. Think of it as borrowing your own money without the toxic fees. Apps like PayActive, Earnin, or Dave have popped up as modern alternatives. They come with their own caveats. Some charge tips or subscription fees, but they're generally a safer landing spot than traditional payday loans. Local nonprofits and community programs can also help. Depending on where you live, you might find emergency relief funds, church-based aid, or community development financial institutions, CDFIs, that specialize in helping people escape predatory lending. These options aren't always flashy. They're not plastered on every billboard or popping up on your Instagram feed, but they're there, and they don't profit off your pain. Now let's say you're already caught in the cycle. What then? Start by talking to the lender. Some states require payday lenders to offer extended payment plans, EPPs. Basically, a way to break your loan into smaller payments without extra fees or interest. You won't see them advertised, but if you ask, they often have to provide it. If you've taken out multiple loans and can't see a way out, a non-profit credit counseling agency can help. The National Foundation for Credit Counseling, NFCC, connects people with certified counselors who can build a plan to escape the debt without resorting to bankruptcy or scams. Then there's the snowball method. List your debts from smallest to largest. Pay off the smallest one first while making minimum payments on the rest. As each balance is paid, roll that payment into the next one. It's psychological momentum, small wins that stack up and keep you moving. But before any of that, the first and hardest step? Stop the rollover. Decide today that you won't renew that loan, that you won't take another one, that you'll find another way, even if it's harder, even if it's slower, because every renewal digs the pit deeper. Every just one more time adds another layer of cement to your financial tomb. You don't need to climb out all at once, you just need to stop digging. And remember, this isn't about shame. It's not your fault the system is rigged against you. You didn't fail. The system failed you. So what do you do next? You learn, you prepare, you build. Start an emergency fund, even if it's just $5 a week. Build financial literacy like it's armor. Track your spending. Automate savings. Use every dollar with intention. You don't need a six-figure income to build stability, just consistency, just strategy. And vote for policies that make payday lending obsolete. not because they're banned, but because no one needs them anymore. Push for stronger regulation. Support community financial institutions. Talk about money with your friends and family. Make shame lose its power. Because in the end, payday loans aren't lifelines. They're leashes, and they'll keep you tethered as long as you let them. But here's the good news. You're not powerless. You can unlearn the trap. You can build something better. Maybe not overnight, but over time, with the right tools, the right mindset, the right community. This story doesn't have to end with a payday lender getting your last dollar. It can end with you winning. So take the first step, not just to pay off a loan, but to rewrite your future. Because the trap is real, but so is your power to outsmart it.